Hello and welcome back, everyone, to the Planning Perspectives podcast. I'm one of your two hosts, Jamie Hopkins, joined by my co-host, Kate Duffy. Kate, great to have you back.
Thanks, Jamie. Good to be here as always.
So we're super excited today. We're going to be joined by Mark Bradford, who is the Director of Wealth Planning here at Bryn Mawr Trust Advisors. And Mark specializes in comprehensive planning to individuals, family, and business owners. And we're going to, hopefully hit on that third one a little bit here today. So Mark, welcome to the show.
Thank you. Thanks for having me. Excited to be here with fellow planners.
Thank you. Well, today we're going to focus on a specific part of the financial planning process, mostly for business owners and entrepreneurs, called exit planning. So simply, how is the owner going to transition away from the business? So we're going to talk about what it is, how and why it's so critical in the business planning process. Different strategies for different situations, because there could be mergers, you could be selling to third parties, you could be transitioning to employees or family members. And we're also going to dive into the emotional part of
Yeah.
it. So we've got the technical side and the planning side, but then what does life look like after exit planning? Because that is a critical piece of the puzzle as well. And so, Mark, let's dive in. Tell
Okay.
us what exit planning is and
Mhm.
why it's so important in the business planning process.
Well, Kate, exit planning is really just good business strategy. It's if you have a successful business, you should know what it's worth. The process of exit planning is really about building a business that is valuable and transferable. And it's not only just from the business owner's perspective, but you want the third party outside investor to look at that business as being something that is valuable and something worth investing in. And it takes time. It's not an easy process. It takes alignment of the business, financial, and the personal legs of the proverbial stool, which you referenced, the personal piece that we're going to dive into a little bit later. We actually had a referral to a business owner client earlier in this year where we started to do some financial planning for them. And one of the things that we looked at was, what does the sale of that business translate to? Well, the unfortunate part about this particular situation was that everything ran through the business. So you had a situation where it was very owner centric, not a lot of transferable value in that particular business. So it became a very cash flow lifestyle business, but not one that had a lot of enterprise value. And we see that from time to time. It's really important to focus on that enterprise value.
Yeah, it's a great point, Mark, because a lot of people, they go start a business and they're, as you said, putting everything, it's really an owner driven job, less so than an enterprise with value outside of the owner. So are you building something that can last beyond you, right? Like that's going to be transferable, that if you're not there, there's some way for the business to continue making money. And those are really different things. So tell us some of the steps. If you are a business owner, you're looking to start a business, either one, right? What should people do from like a process to make this whole transition and exit planning go a little bit more smooth down the line when possible?
Yeah, when you think about exit planning, it's really getting yourself from successful to significant. In the beginning, you're building a business, you're trying to make ends meet, you're trying to get to that point where it has sustainability. And once you've gotten to that point, you really want to look to make sure that you have an idea what it's worth. Am I building value? Am I growing the business? Do I have the things in place that you were just referencing, like the strong leadership team? Do I have the systems, the processes, the contracts with clients or vendors? Intangibles make up about 80% of the value of the business in a lot of cases. So it becomes really important to make sure that you've looked at all of that. When we start the process of exit planning, many times it's really just meeting them where they are. Um, I think one of the greatest challenges is the fact that there's a tremendous lack of understanding about what the process entails. Many times it's tell me what the business is worth and thinking that you can just flip a switch and sell it very, very quickly. 70 to 80% of small businesses that are put up for sale don't sell. And there's a reason for that because it does take a transition team, takes an advisory team that might be made up of legal counsel, CPAs, financial planners, maybe even a value consultant or a family dynamics advisor. So a lot of different people, and it can take a village depending upon the complexity of the business.
And that lends itself to time.
Hmm.
Like, there's not sometimes people are like, "Okay, I'm ready to sell. Now what?" And it's like, "Oh, we need to rewind a little bit." So, in terms of timing, all the things that you talked about, planning and putting the team together, like how far in advance of the exit do you start these conversations?
I think you really want at least a couple of years. I mean, ideally, 2 to 3 years would be beneficial. Much of this comes back to the personal side of it and what you want for yourself. You'll find some business owners that are just burn out, and you don't have 2 to 3 years. They made the decision. They're ready to go. It's no longer about getting top dollar. It's about finding a way to keep their peace of mind and their sanity. So you have those types of situations where unfortunately you have less that you can work on. But if you do have a lot more time, you begin to look at the what's the value of the business today? What does that translate to for me on the personal planning side? And then what's the wealth gap? What if we unlock the value of this business, what are we still short? And helping them work through that becomes really important.
Yeah, I think the when is such a great conversation and question because sometimes I've gotten the opportunity to coach people as they're starting their businesses through the nonprofit FinServe, and I helped somebody do that this past year. And one of the things I kept having to remind the individual is like, well, what's the goal of this business? Do you want it to be multi generational? You're going to build a slightly different business
Mhm,
than if you say, really, my goal is in 10 to 20 years to sell this business.
mhm.
And in certain industries, there's fairly robust exit opportunities because maybe private equity or
Yeah.
aggregators or large enterprises have come in. So they're looking for specific things, actually. It's
Mhm,
not just, we'll buy anything. They want an easier transition in the business. So they
mhm.
don't want, really interesting ad hoc things and for you to create your own CRM and have your own like way you look at data. They want to be able to port that in. So actually
Mhm,
to if your goal is to sell a business to somebody else, it really is, it's figuring out what are they looking
mhm.
for that is going to be value additive to my business as I
Yep.
build it. So I think that's, if you know what the point of the business is when you're starting it, it can be helpful in the structure, the legal structure, how you design the company, what you invest in. So Mark, add a little bit this. So how do you align the team? I think this goes to
Mhm.
the same question of who are you bringing in? Who's leading this business exit planning conversation? Who do you probably in the best scenario have as part of this exit planning team?
Yeah. Again, each situation's unique. It's going to vary depending upon what your end game is, what you're trying to accomplish, whether you're looking at maybe an internal transition or an external, and we can talk a little bit more about that. The complexity of the business comes into play. But I would say that you're probably going to start with your most trusted advisor. Um, we find that individual to be the financial advisor in many, many cases. The Exit Planning Institute did a state of business owner readiness survey and came back that the financial advisor was, in fact, deemed to be the most trusted for these conversations. So a lot of times it will start with them, but you want advisors that understand the bigger picture, that really get the fact that this is going to be a collaborative effort. You're going to have to work very closely with the accountant. Certainly, if you're looking at internal transitions or intergenerational transfer, passing it down, there's a lot of estate planning, tax planning that takes place there. If you're dealing with private equity or business brokers, that's another avenue. And certainly, you could go the path of maybe transitioning to employees, and that's a very nuanced space with ESOPs as well, employee stock ownership plans.
Yeah, and I'd say here at Wisvis and Bryn Mawr Trust, I've seen you pull in right planners, advisors, tax professionals on the team. Sometimes even the lenders, right? When you have a
Mhm,
good commercial RM, they could be lending as part of the deal, wrapping up an old loan. So how do you involve all those people successfully
mhm.
here?
Great question, and again, I think it's making sure that the client has an understanding of the journey that they're embarking on. This isn't gonna be a quick process. Fortunately, we'll see a lot of opportunities that'll kick up actually from the commercial side of the house where there is already a strong relationship in place. And we want to be additive to that. We want to be able to sit down and avail them to the fact that we have an understanding of the issues that they're faced with. We've got a lot of tools and resources internally, a lot of expertise in house, But then there's gaps that we're going to have to fill, and we're going to have to rely on third party experts. And you just want to prepare them for that. You know, costs can get in the way, but this is too important to not really get the right transition team in place.
One of the things you just mentioned, so I want to pull on this thread before we move off, is
Hmm.
you said there's different ways that we could exit this business.
Hmm.
One could be internal versus external. Probably other ways to look at this too. But when you look at that internal versus external conversation, what are some of the key decision points or differences in
Hmm.
both the structure and probably mindset of going through a transition to your generation two or generation three internally, your employees, your
Yeah,
your shareholders versus selling it off to a third party?
yeah. You're right. They're totally different mindset if you're looking internal versus external. Internal, you're probably more concerned with not only your own future well-being and looking at your own future for your family and your own financial independence plan, but you're also concerned with your legacy and the business and maybe the employees and the management team, and making sure that things are set up so that you don't leave behind something that tarnishes everything that you put your life and effort into. It's not about top dollar. If it is about top dollar, you're not going to go that route. You're going to look more towards the strategic buyer that might maybe want to explore a new market or new services that are offered that could be additive to their existing business. Private equity is certainly an opportunity, recapitalization and bringing other investors in. All of these can end up being some options, but there is a very different mindset on that.
And we work a lot with family businesses, and there's a lot of dynamics that come into play there, especially if you have like a first generation person who is creating and building this business, and there's a lot of control. And then maybe a next generation or another family member comes into the equation as well. So, what considerations, like different considerations, do you have that you advise when you're working with an entrepreneur that is selling or transitioning maybe to the next generation?
Yeah, I think it's a couple of things. First and foremost, again, thinking about um, being realistic with what are your own needs, what is your own personal financial independence plan. And I use financial independence because, you know, at what stage do you want to work because you have to, not because you you need to, and making sure that that plan in place is again realistic, and then taking a look at the family members that could be potentially moving into this business. Are they in a position to hit go and to be able to run this business effectively without a lot of drop off? If you have a business owner that's been in business for 30 years building relationships, and now junior comes in and is expected to take over and to drive the business growth at the same level with father or mother exiting the business, um, that's a challenge. You want to have a continuity plan. There's a transition plan. That stuff takes time. It's not stuff you again you flip a switch. So I'd say that's the biggest thing, and many times there could be some coaching that has to take place along the way.
I think that's a really great point because everybody comes into the business sometimes with a different mindset. You might have someone who built to transition because it is the legacy, it is the meaning, it's the family, and then someone who wants to scale the business and sell it
Yeah.
and ultimately like exit, which there can be some challenges in that dynamic as
Oh
well.
yeah. Absolutely. And sometimes you need professional
Hmm.
support. Somebody who specializes in family and business dynamics to help work through some of the challenges.
Yet I think the amount of support in that instance definitely varies by person. I've ran into people who are really happy that they had a really lean team when they did an exit and they worked it out with the other party very closely. But you see for a lot of business owners selling their businesses, 90% of it is high emotions from the business owner.
Mm.
It's likely the single biggest financial decision that they will make for themselves and their kids and loved ones in their entire life,
Hmm.
and for the most part, it's pretty permanent. It's
Yeah.
not one that we usually get to say, "Hey, we didn't like how this worked out 3 years later. I'd like to undo all this."
Hmm.
There are instances of that, but it's pretty rare. This is a pretty permanent decision. And then one of the other things that I see a lot with business owners is they struggle at that moment when it's, "I'm gonna sell the business, but I have to give up control now too.
Mm.
Because a lot of them, they've been used to being in charge. They make the decisions. They run the business as they want to run it.
Mhm.
But when you sell it, often what comes with it is you're not the sole person making decisions anymore. You're not in control like you were before, but that can vary, right?
Mhm.
Sometimes they can have a big role after sale
Mhm.
and transition over time. Sometimes you sell and you're pretty much done,
Yeah.
relatively quickly. You're probably involved, but you're probably not running the day to day.
Yeah, and many times it's baked into the deal structure
Mhm.
that they're gonna be on for a period of time to help transition it.
So, what questions or things you think the business owner should be thinking about, discussing, emotionally dealing with before this sale, depending on how are they going to stay involved with the business post exit?
So, that's a big one when we talk about the personal. In fact, just recently I attended Exit Planning Institute Planning Summit, and they had a panel of 3 business owners. They were asked what are their biggest challenges, and it was hands down the personal side of the equation. Thinking about what's their next. You invest 20, 30, 40 years into a business, blood, sweat, and tears. Emotionally, you're tied to it. It's your identity. And now all of a sudden you're exiting this business. You're gonna play golf, you're gonna go on vacation, are you gonna do some board work, charitable. um, they said it was also challenging on the home front. Now all of a sudden you're home with your spouse a lot, and,
Right.
and they're like,
Go back in.
"Don't you have something to
Yeah.
do?" So that's one of the biggest things is to think through that personal side of it.
Yeah. Yeah, I've seen business owners, right, as part of their deal in the contract actually say, "Hey, I have to have an office. I'm gonna come in 5 days a week." And they're like, "Well, what are you gonna be doing?" And they're like, "Getting out of the house." And, right, those are things you should think about,
Mhm,
right, as part of your deal structure. Like, do you have a role? Do you move to the board afterwards?
mhm.
Do you take a leadership or transition role, but it's different than your old role? And then I think emotionally, you have to be willing to let go of some of the things because I think that's if you talk to employees, often the challenge is like the former founder owner is still sitting here,
Yeah,
but somebody else owns the company now, and you
right.
have to be able to let it start to transition and move and not kind of be trying to control
There has to be that
everything.
empowerment to be able to run with it. Yeah.
Absolutely. So I think that's a big, I mean, it's a big challenge. I think it's one of the benefits of having people work through the deal structure and conversation with you,
Mhm.
because if it's just you and the party that's buying it, internal or external, you might start creating conflict there where you almost need somebody else to be able to step in for some of those conversations, be able to have
You
the
do.
offline conversation without everybody at the table to
Mhm.
work through some of those emotional and functional aspects of the planning.
Yeah.
Yeah, and we've talked about that before when we've been working with clients. It's like when you have the planning part where you can go through these different financial scenarios that might happen in the exit, and you have an advisor there, someone to help guide the conversation. Because if the person doesn't know what kind of life they want to live on the other side or they haven't thought about it, it can be really challenging to
Mhm.
uncover it after the fact.
Yeah.
That's where we see a lot of like emotional discontentment, I would say, with owners who step into retirement
Mhm.
or step out of the business. And it's like, okay, now what? There's this new exploratory process that has to happen, and they
Mhm.
haven't prepared for it. No one has helped guide them through the scenarios. When we work with
Yeah.
clients and we look at these different financial scenarios, we can help say, okay, what is this going to look like on a daily basis for you? How can we help sort of uncover what that next chapter looks
Mm.
like for you? Which I think is really, really important. And for
Yeah.
a lot of business owners, their wealth is tied up in this private asset, this hard
Yeah.
asset.
80% of their net worth is typically tied up in the business.
So then you have
Yeah.
this liquidity event,
Yeah.
and suddenly it's dollars.
Yeah.
It's in your bank account.
Mhm.
It's cash, it's investments. Um, what happens when the wealth converts to cash?
Yeah. So we're dealing with a situation like this now. We had a referral from our commercial partners, and much like you're talking about, running through all the different scenarios and thinking about your next and your personal planning should be an important precursor. Unfortunately, it didn't happen. The sale took place, the deal terms were baked, the number's the number. So now we're just plugging it in. And when you're doing financial planning, you got to go to the other levers. It's not like you can go back and ask for more
Mhm.
money on the deal or adjust the deal structure. So now it's about taking a look at, do I delay retirement, reduce the lifestyle? And some of the other things associated with retirement planning. There are some of the variables, the rates of return, Usually, when you have a liquidity event, you want to put it in a place that allows you to think more strategically and do the long-term planning that's necessary. So you can park it in a high yield money market account. Make sure you have your planning team in place. Make sure you're working with your spouse to think about that next. Think about what the lifestyle is going to be, and make sure that you're pulling all the necessary levers and understand your options.
One of the other transitions I would say is when you have this business that you've invested in for so long that maybe gets valued every once in a while, and
Hmm.
then all of a sudden you can see the value of your portfolio every
Hmm.
single day, the value of the investments. That can take people a little bit of getting used to for
Sure.
some people because as they watch it go up and down, it can create this internal like, what's going on here?
Some angst,
Right,
right?
when they haven't necessarily been conditioned
Yeah.
to withstand that, even though there is the value of the business does change, you just don't actually see it.
Yeah.
Yeah, one of my deals I got to work on in the past, the owner, was so nervous about it. It was a lot of back and forth, late night conversations. He'd call me at like 11 o'clock at night on a Saturday, and we talked through things. And it was like everything was scary to him because he knew that once this all happened, right, you get one shot at it,
Mm-hmm.
and it turned out well. But the we went to dinner to kind of celebrate the day he sold, and my question to him was like, well, how does it feel now when you saw the money in the bank account?
Mm.
Mm-hmm.
And he was like, honestly, it felt really good because it was the first time in his life that he felt like he was okay financially because he'd
Mhm.
always been working in the business, building it. And then that transfer check hits there when you sell
Yeah.
it. And it's real money all of a
Mhm.
sudden, and life is different. And so then it's like, well, where do we put all these things? What are
Mhm.
we doing? And I think the more you can get ahead of where you're going to put this money afterwards and actually work on that, because for a lot of the business owners, selling the business is a 24/7
Yeah.
endeavor. So to
Yeah.
have somebody else, your advisor, your tax professional, working on what happens to the money, how's it going to be invested? Are you funding 529s or making charitable contributions that year? Because
Mhm.
you might want to be you're reducing some of the taxes
Mhm.
there. I think those are big ones. But Mark, what other ones do you want people to think about before the sale? Because
Mhm.
you've talked about some of the ones where you come in after the sale. There's
Mhm.
less you can do, not
Yeah.
nothing,
Yeah.
but what are some of the things you'd love to see before the sale, maybe as techniques or best practices?
Yeah. I think um, a couple things I want to stress. Don't um, the formalities are important. Don't don't do things informally. There's too much to risk.
Mm,
So I think when you talk about valuation, for example, it's not one of those things where you log on to your smartphone and can see the value of your
yeah.
business, which is where the angst is many times. You want to think about getting things formally valued by a professional when you get to a point where you have a really significant business. You don't want it to be questioned in due diligence when you're going through the deal. You don't want to undervalue your intangibles. You also don't want to be in a position where the IRS questions it, because we've seen that happen. There was a big court case last year, resulted in additional almost $1 million in tax dollars, federal state taxes. So dotting the I's, crossing the T's with a formal valuation, even thinking about what's the risk. So we talked a little bit about financial independence, what you want for yourself and the legacy, but what are the risks associated with that business if you're not around? So you pass away, you get hurt along the way, you get a divorce. Many businesses, you want to have an agreement in place that stipulates what happens, and you want to make sure it's funded appropriately with insurance. Things can get messy, if you don't have things locked up and I's dotted, T's crossed.
Yeah, I think that's a great point. Just any of those, right? Powers of attorney, making sure that there's some internal succession if you become incapacitated,
Mhm.
because you see that a lot. Actually, you mentioned a similar scenario earlier when the business owner puts all their personal stuff in there, can
Mhm.
really make the business murkier, and actually running the business like a true business and
Yeah.
making sure we don't have improper titling of assets. It's when we see, actually, we talked about
Mhm.
that. We were out at an estate conference this past
Mm.
week, and that you have both sides of that. Sometimes owners, because it's kind of just their life, they'll title the car or the building or something in their own
Everything
personal
runs through.
name.
Yeah.
And that all of a sudden something happens to them, nobody else can get access because there was one single point there, which was this business owner. So it is really important that pre-work to actually get all that resolved,
Mhm.
make sure you're operating a good, clean business that you
Yeah.
can transition.
Yeah. Yeah. Because the cleanup can take a while.
And I like the stat that you brought up earlier. About 75% of business owners plan to exit in the
Mhm.
next 10 years, and 20 to 30% will be successful. So there's a lot of opportunity for people to reach out and just have exploratory conversations. What is
Yeah.
the process? What should I be thinking about? I don't think it's ever too early to engage necessarily to learn more.
Not at all. No, and I think that's where it starts. It starts with thinking about what do you want, then educating yourself and getting your team in place. Want to explore your options, formally value your business. You want to make sure you know what it's worth, and then do the necessary plan to figure out what it's going to translate to for you
Mhm.
personally.
So, Mark, we've covered a lot today. I want to kind of do a
Mm.
quick hits of things at the end. So, what are the top 5 considerations that business owners should walk away to have the best plan for their exit?
Mhm. So I touched on a couple of them, which is basically make sure that you think long and hard about what your next is, what you want. What is are you in a position where you're really looking to exit the business as soon as possible for top dollar? Are you looking to potentially grow the business and then maybe at 5, 7 years down the road, if you got a great offer, you would consider it? Or is this something that you want to pass down as a legacy to your kids or to your employees? All of those are going to steer you in one direction or the other. Make sure you have at least a trusted advisor that you can go to, share all this with, and say, "I need your help. I need to pull together the team. I want to understand these options. I want to think about it, and then I want to get to a place where I'm doing the personal planning that goes along with it." And you have the right people at the table to talk about the deal structure as well, and making sure that it works for you, your own financial independence, the business, and uh, and that you set yourself up for success.
Yeah, I usually use that terminology when it relates to retirement, but make
Mhm.
sure, right, you're retiring to something, not just
Yes.
from something.
Yes.
So,
Yes.
right, in this case, make sure you're exiting to something, not just from something. Right. That
Not running away, right?
Yeah, yeah, that's great. Like you exit the building, make sure there's something to step out to.
You're not gonna pay a premium for a business that's on fire, right?
Absolutely. Yeah, it's a private equity firm I worked with once said, right, we don't want to buy other people's problems.
Right.
And that was a
Uh,
really good,
uh,
insightful comment,
great,
right? If your
great way to put
business
it.
is struggling and it's a mess, people don't want to go buy that. They want to buy good companies. Now, sometimes you can buy distressed companies for
Mhm.
less, but generally speaking, you want to be selling in a position of strength, not where everything is
Yeah.
broken and a problem. So, to sum it up, Mark, we ask everybody this, but what's the best piece of advice you've ever received or something that you tell everybody else?
Plan ahead. Don't take things for granted. Again, don't take shortcuts. This is just something that is way too important. You've invested your life and you've built something pretty special. So just make sure that once again that you're working with a proper team and think about what you really want.
Yeah. Well, Mark and Kate, thank you both so much for being on the show today. Exit planning for business owners, such an important concept. The majority of Americans work for small businesses in the United States,
Mhm.
and the transition of these, the success of these businesses are core to the economy.
Mhm.
So making sure that they transition and value is retained here is so important. Mark, you and your team do a lot of great work here at Bryn Mawr Trust and Wisfis. If people want to reach out, or what's the best way to find you?
M. Bradford at bmt.com. And then, of course, check out our website at bmt.com.
Well, Kate, thank you too. It's
Thank you,
great as always.
Jamie.
And thank you everyone else for stepping in and watching this episode of the Playing Perspectives podcast. Make sure you subscribe on your favorite podcast channel so you never miss an episode.
Thank you for listening to the Planning Perspectives podcast. Don't forget to click the follow button to be notified when new episodes are available. Visit our website at www.bmt.com or call us at 833-973-7633. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Investments, not a deposit, not FDIC insured, not insured by any federal government agency, not guaranteed by the bank, may go down in value.